Well, coming into tax time, and property investors really need to make sure that they're getting all the deductions that they're entitled to around their investment properties. Christian from Asset Reports, great to talk to you, mate. In simple terms, what is tax depreciation?
Simple terms, it's the write-off of an asset. So when we invest in assets, they start depreciating, and that loss in value we can claim as a tax deduction, obviously because we're using it to generate an income. And that's exactly the same for a house and its components to a house as well. So the roof, the walls, in most cases, ovens, air conditioning systems, carpets, etc. We put a monetary value to that and you write it off as a tax deduction each individual year.
How many investors do you reckon as a percentage are missing out on this?
Yeah, I'd say probably 80% of investors aren't claiming their full entitlement. So they'll be claiming something, but the reality is the difference between sort of maybe even utilising an accountant to claim something that you've done off receipts or something, and engaging with a quantity surveying firm like ourselves could be the difference between $3,000 a year all the way up to, we had one with $7,000 a year last year as well. So.
Yeah, well, that's the thing, isn't it? At this time of year, everybody is engaging those accountants to get all the financial matters straightened out for everybody. But why is it the role of asset reports and quantity surveyors to do this rather than an accountant?
Yeah, accountants are great. We work side by side with accountants, and you know they're good at counting off receipts and having things in front of them. But actually, purely for estimating construction costs, back in 1997, the ATO said, look, we're not allowing accountants, valuers, real estate agents, etc., to estimate construction costs for tax purposes. So only now registered quantity surveying companies who are registered with the Tax Practitioners Board, which we are able to obviously estimate those construction costs.
It's like the old saying goes, KJ, accountants are great at counting beans, quantity surveyors are great at counting bricks.
Yeah, that's it. That's right, and that's our profession, Tom. You know, that's we're not accountants. We work with those guys. You know, we estimate construction costs, whether or not it's a small house through to a high-rise commercial and residential development. So.
Okay, so well, on that, what sort of property should you be getting a schedule for?
So even older style properties may have some deductions available. Obviously, your newer style properties are where you're going to see the best return. I guess it's just about asking the question. A lot of people think, deductions only last for 20 years. You've got 40 years worth of deductions in a property.
Right. And the one schedule will go for the life of that 40 years.
Yeah, so we'll do a 40-year schedule. So that schedule will be updated for free each year as well. And that'll capture everything that you can claim for the property. We're quite happy to advise you whether or not, what you're doing to property falls under maintenance and repairs, or whether or not it goes into a schedule. But yeah.
Hey, what's the difference between providers?
Providers, I guess when it comes to numbers, not very much at all in regards to what you're going to claim. We're all governed by the AIQS, the Australian Institute of Quantity Surveyors. So we utilise their numbers and fees and figures to generate our calculations for construction costs. But the reality is it's all about old-fashioned service, Tom. Also pricing and turnaround time,
How quickly can asset reports do a tax depreciation schedule?
So depending on access to the property, we can generally get out there within a week or so, and then the schedule would be ready within 14 days thereafter. So plenty of time to lodge for this financial year. Even if you've got a property, you've had it for a little while as well, you can actually recoup up to 2 years worth of missed deductions.
This is all really great information. What's the next step now for investors if they are interested?
I would either contact us via email or give the office a call, jump onto our website, educate yourself. But I guess the free estimate is what you want to inquire about. It's free, it's done manually, it's not an algorithm, which some companies out there do, which inflates your deductions. We want to give you the right information so you can make an informed decision, and then you can proceed forward and start saving some extra cash.
That's what it's all about. KJ, thanks so much for your time, mate. Some great info in there for everyone.
Yeah, absolute pleasure. Thanks, Tom.
See you, mate.